Yusuf here. This is going to be a video on the basics of the footprint. Similar to the market profile video, it's going to be a series that I make discussing the footprint, how I use the footprint, all that cool stuff. Before I get into it though, if you're not following me on Twitter, make sure you're doing so. I tweet order flow clips, drop some explanations, retweet some useful information, and tweet daily plans over there. So I suggest you follow me and turn on my notifications. Also, if you're interested in purchasing Jigsaw Trader, which is the DOM that I use, you can use code YUSEF for $30 off. And if you're interested in using an online prop firm, I highly recommend using Apex Trader Funding. The coupon code down below will give you the best discount for whatever is currently available. And finally, I have a free Substack where I post daily reviews. Not really daily reviews, but I post plans and reviews every now and then. So go subscribe to that as well. Now that that's out of the way, we can go ahead and get into the basics of the footprint. So what is the footprint and why do we use it? It is a type of chart that gives us details a traditional candlestick chart would not be able to. Allows us to see the orders that make up a candlestick. It informs of how many contracts are traded at each tick, if that is your setting. Some advantages of it are how it allows us to get greater detail of the current auction going on, monitor continuations for trades, and spot imbalances, and inform us of key levels. So it's important to understand that there are different kinds of footprints. So it all depends on your charting software. I personally use Sierra, and I recommend using Sierra. If you like my chart book, you can DM me on Twitter or Discord. But some of the most popular footprint charts include the bid/ask, volume profile, delta, and imbalance footprints. So the bid/ask footprint is the one that we will be using in the videos. It shows the total amount of at bid and at ask at each price interval you have your setting as. So for example, if you have your setting set to 1 tick, it will show you each and every single at bid and at ask at each tick. If you have for four ticks, it will take up the total amount of at bid and at ask for those 4 ticks, add it up, and then tell it to you. The volume footprint shows total number of contracts traded at each price interval you have your settings as. So it's kind of like a volume profile, but instead of having something like a daily, weekly, monthly, whatever, you can have it set to time interval. So maybe every 15 minutes it prints a new volume profile. Different kinds continued. Next up is a delta footprint. Shows the delta for each price interval you have your settings on. So cumulative delta is pretty much the difference, or just delta in general, is the difference between the at bid and at ask. So for an example, at the price of 4,100 evens, a total of 5,000 market buy orders came and 4,000 sell orders came. So the delta at 4,100 is 1,000. Next up is an imbalance footprint. Highlights any price where there's an imbalance of buying/selling volume. Settings can vary, but they tend to be a ratio of 2 to 1 or 3 to 1. It's useful for spotting things such as buying and selling pressure. Okay, so this is at bid and at ask footprint. So this is a traditional candlestick. So the way this is set up is that this blue bar explains a little further on, but this blue bar right here represents the body of the candle. This red bar represents the body of the candle for a bearish candle, and this is for a bullish candle. And then whatever is not being engulfed, I guess you could say, or whichever ticks aren't being engulfed, those you can consider those the wicks of the candles. This is a volume footprint. This is motive wave. This is, by the way, Sierra. It's a screenshot that I used. But this right here is motive wave. As you can see here, I believe they have it set for 5 minutes for their volume profile, for their volume footprint. This is the delta. So instead of showing the at bid and at ask, so each and every single separate, each market buy and market sell, it just gives us the delta. So in this example, -1 means that there was one more aggressive market sell order at this price. At something like this, 0, there's an even amount of market buys and market sells. Here, right here, 20. There were 20 more market buys than market sells. So now that that's out of the way, we can talk about the anatomy of the at bid and at ask footprint. So red on the side represents a bearish candlestick, blue represents a bullish candle. The entire red bar would be the candlestick's body, and the others are the wick. Volume done at price informs us how many market buys and market sells took place at each tick. Settings are set to 1 tick for me personally, unless we have a lot of volatility. Then you can switch to something like a 2 tick. It all depends on the instrument that you're trading. For example, if you're using the NASDAQ, you might maybe want to use a 2 tick or a 4 tick, because the NASDAQ, the daily range for it is a lot wider than the S&P. My footprint is set to show 5-minute intervals, so after 5 minutes it will print a new bar. So now, how do we read the footprint exactly? So once again, at bid and at ask, but there are 3 shades of blue and 3 shades of red. The darker the color, the more intense the buying/selling is. In this example on the slide, we can see how there are 3 different shades of blue. We have this light blue, this it's a bit darker, and we have this extremely dark blue. And in my opinion, this is probably the most important way of using the footprint. It's the calculated values. So the cumulative volume day tells the total amount of volume done on the day, useful to tell us if we have a low volume and what type of day we might have ahead of us. Total volume used for context, and we can use it to tell us what might occur next. Tells us the total volume conducted in the time frame in the time frame / settings we have for our footprint. Cumulative delta, adding up all the market orders and market sells in the 5-minute period and telling us the final number. And then the day cumulative delta tells us the total delta for the session, can be useful for reversals. So in this first one right here is the total volume. So for example, at 12:55, a total of, sorry for the poor screenshot by the way, but at 12:55, a total of 11,083 contracts were traded. The delta within this 5-minute period was 891. The cumulative delta for the whole day was 793. So that means throughout the entire session, the RTH session, since 9:30 till right now 12:55, buyers have been more aggressive. They've bought 793 more contracts than sellers. Volume per second is another useful thing. I didn't include it in the slide, but this can be useful. I'll explain this in another video, but it's another useful tool that can kind of save you from taking poor trades. And then finally, the cumulative volume on the day. You can look at key times such as EU close, the amount of volume conducting the initial balance, stuff like that, to kind of just give you a better idea of the type of day we might have. Once again, this is just a very, very, very basic video on the basics of the footprint. If you guys have any questions, don't hesitate to reach out. I'll be getting into more detail in the next few videos, but yeah, hopefully this was helpful. I'll see you guys around. Take care, everyone.